Hi everyone, welcome to my channel. I'm Doris. I'm here to show you about my stock account and today's market update. Today the net asset of my account is 62,501.36. Today Apple has closed down 0.84%, SQQ closed up 2.82%, and SPY closed down 0.5%. United Natural Gas closed up. Today's market generally performed lower. Dow Jones closed down 0.37%, Nasdaq closed down 0.82%, and S&P 500 closed down 0.48%. Today, the internet industries continued to lead with a loss, and they have performed on average by about more than 1%. Today, let's talk about the US PPI of January. On Friday, US PPI of January has released, and it has full-on exceeded people's expectations. Currently, the service costs hit the biggest increase in July, and which may increase people's rate cut expectations. Overall, PPI and core PPI growth in January also exceeded economists' consensus expectations, driven a sharp jump in the costs in the U.S. services sector, and the producer price index rose 0.3% in December, beating economists' expectation forecast of 0.1%, and rose 0.9% from a year ago, beating people's expectation of 0.6%. In addition, the core PPI rose 0.5% and 2% from a year earlier. The strong figure in the data reflects that the continued increase in the prices for service categories, including hospital outpatient care and portfolio management of financial institutions. It is also understood that the PPI breakdown data shows that the U.S. services sector costs more, about 0.6% month-to-month, the biggest increase since July 2023. The prices of goods paid to producers fell about 0.2%, a 4-month decline. The less volatile PPI measure, excluding food, energy, and trade, also rose 0.6%, the biggest month-to-month gain in a year. The good news is that the cost of processed products are due to low energy prices. However, the demand for intermediate processed products, not including food and energy, rose 0.3% month-to-month, the biggest increase since May 2023. Another data released on Friday shows that the U.S. housing capacity fell in January to its lowest level since August. Treasury continued their selling streak after the PPI data. The yield on the 2-year Treasury bond, the most sensitive to interest rate expectations, rose to its highest level since mid-December, when the Fed chairman suggested that the benchmark rate has peaked. After the PPI data, the Fed Watch tool shows that the interest rate futures traders sharply lowered their expectations for a rate cut in May. With only a quarter chance of a rate cut in May, an expectation of a sharp rise in June, and the expectation of a March rate cut of less than 100 basis points in 2024 was completely shattered. Before the January CPI and the PPI data, investors generally believe that the Fed may well start its interest rate cut decisions as early as March of this year. However, the CPI and PPI data show that the resilient producer economy and also the U.S. consumer economy in general, which means that it is harder for the Fed to cool down the inflation, and therefore a signal for a rate cut may be further needed and awaited later this year. One of the reasons that the economists at the Fed and Wall Street focus on the PPI result is that the several categories are used to indicate special reference information for the Fed's favorite inflation indicator, the PCE. and the January PCE will be released later this month. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.